future trends, deep insights, industry leaders. This is the iGaming Next podcast with your host, Karolina Pelc.
Welcome back to iGaming Next Online.
There's not just one goal, there's multiple goals. Ignore dilution if the deal's good, because you'll make more from a bigger pot.
It wasn't that people preferred the office or preferred remote. They actually preferred the option.
In other words, COVID-19 is giving us a glimpse into the future.
Hi, everyone. Welcome to another episode of my iGaming Next podcast. My name is Karolina Pelc. I'm a CEO of SharedPlay. And today I have a pleasure to feature another guest. Hi, Richard. Nice to have you here today. Thanks for agreeing to be on the podcast.
Very nice to be here. Looking forward to it.
Me too. Richard is a very well-known industry figure, but I'd like to give you a little bit of introduction. Richard Carter is the Group Chief Executive Officer of Bragg Gaming Group, an innovative B2B online gaming solution provider and the company behind Oryx Gaming. Prior to recent appointment, Richard has served as Bragg's non-executive chair, advising and providing support to Bragg's team on developing a global strategy focused on partnerships, continued growth of the organic business, and consideration of all M&A opportunities. Richard is also a ex-CEO of interactive sports betting solutions and services provider called SBTech, held the role for 5 years until the company merger with digital sports entertainment and gaming company DraftKings through a three-way deal with Diamond Eagle Acquisition Corporation in April 2020. That's I had to read it out because I mean it's a lot, pretty remarkable.
It is a lot.
Remarkable career journey. So first of all, let me congratulate you on the appointment.
Thank you.
It's very exciting news. Can you tell us a little bit? I read in the press release you will be an instrumental person in the aggressive growth strategy. Obviously, you have great experience in M&As, but tell us a little bit about your plans for the company and what made you choose this as your next step in a very impressive career journey so far.
Okay, well, I think first and foremost, what made me choose Bragg, I think it's the people and the culture. They have a very talented team of engineers and product experts, which are based in Slovenia. And they build a very modern, sort of highly modular proprietary tech stack that's built on sort of legacy-free code. So when I was looking around and thinking about sort of what to do next, I think having a very scalable tech stack with the ability to integrate and release content rapidly, I think that's sort of key in terms of looking at the industry going forward. So for me, it sort of ticked all the right boxes. It's an established leader in Europe. They have a solid track record. And I was looking around and I really believe that their product offering can add a lot of value for operators in North America. So it was a combination of people, technology, proven track record, and then just looking at, analyzing what's the real opportunity in North America over the next 3 to 5 years. And I really think that, Bragg / Oryx really have those foundations in place to really make a big difference.
It is a really great team. I had the pleasure to get to know some of the team, and I was really impressed with all the skill sets and the commitment to the business. You mentioned the opportunity to North America, so I wanted to dig a little bit deeper to the sort of strategy to diversify revenues and grow in the US. I've seen that you've recently made an acquisition of a slot studio called Spin.
Yep.
Tell us a little bit about the rationale and how does it fit into your overall strategy?
Sure. Spin's a great business. It's a aggregation, content, and distribution business. And it's a real game changer for Bragg. It effectively accelerates our entry into the US market by probably up to 2 years, and will create a sort of tier one vertically integrated B2B supplier. I think for people that don't necessarily really understand the US market, there are a couple of sort of barriers to entry. First is obviously you need to go through the regulatory process, which now is quite straightforward if you're a sort of leading established company. But then I think the bigger issue is not just getting the license. It's actually having the relationships and having the pipes that go into all of these operators. And if you talk to some of the leading operators in the US, just to try and get on their list of integrations can anywhere be 12 to 16 months. And so just by analyzing and looking at that, we looked around and thought, look, we haven't got 12, 16 months. And we looked around and, Spin has been in the market since the beginning. Ken Young, who runs the business, is, highly experienced. And so, we started speaking and, both companies have a similar culture. They have a similar sort of thought process in terms of where they think the market's heading. So it just ticked all the right boxes for us. And I think what's really also important is, the acquisition brings a wealth of US market know-how, which I think is invaluable, from a product perspective, a technical perspective, and really importantly, a regulatory and compliance perspective. And I know this from obviously my time at SBTech, having that local knowledge, that local compliance and regulatory knowledge, is huge. And then I think there's also a big win for Oryx because we obviously have a lot of good European exclusive content. So, we can effectively bring that to the US market quicker. And it allows us to roll out our player engagement tools like jackpots, leaderboards, and tournaments, which I think is going to become an increasingly bigger opportunity in the US market. So it ticked all the boxes for us, and it also brings us some additional resource. Spin has a well-established development center in Chennai, India. So yeah, it's very, very exciting for us, and we're really looking forward to working with Ken and his team, and I think it's a real game changer.
You mentioned, understanding of the US market is key if you're planning your entry. I mean, it's sort of intuitive, but you are a recognized authority when it comes to the market. From your experience from SBTech launching the sportsbook in there, now, before you took over as CEO, you advised the board for a while, so you got to know the casino and aggregation side of the business much better. I would like to use this opportunity to get your thoughts on why exactly is it that North America, both Canada and the US, are still seen as such an amazing opportunity, and also at which point is it too late to get involved in the race?
So that's a lot of questions. I think in terms of the opportunity, clearly, we've seen over the last 12 months, New Jersey's now on a run rate of $110 million a month of GGR. Michigan's recently launched; it's up there with a similar sort of run rate. New Jersey, so you've got 3 markets already that probably are on a combined run rate of roughly $4 billion. So that's quite a significant market. We know from looking around the world and looking at most European markets, the casino market tends to be, probably a bit bigger than the sports betting market. So, you can see the success in the US with sports betting. I think, we're looking at roughly 20 states, probably by the end of this year. And we sort of know from a European perspective and a global perspective that casino will tend to follow. So I think there's clearly a good runway to, in the next 3 years, you could clearly see that the iGaming market just in the United States, should be on for a run rate of about $10 billion, and that's $10 billion, and that's obviously very, very incremental. So I think that's why a lot of people now are looking at the opportunity, especially, I'm speaking to a lot of European-based content suppliers over the last 4 or 5 months, and obviously, if we go back a year, we only really had New Jersey, and then we've gone through this pandemic, and then you've seen this huge increase in the New Jersey market. So all of a sudden, I think a lot of operators were mindful of the US, but there's like lower hanging fruit in Europe. They didn't necessarily, want to go through the whole licensing process. But I think now with 3 markets live, with the huge growth, incremental growth in the size of the market over the last 12 months. I think a lot of specifically, non-US based content casino suppliers, strategically now I think are looking at the US market and seeing this as quite a significant incremental growth opportunity for them. Now, I think there's a question on, does a lot of the European content resonate with Americans? So that's still a question mark. I think my view is that really, really high quality, good games more or less resonate anywhere.
Absolutely.
So I think they will, but I think, just to go through the process in America in terms of getting your technology through the lab, each game through the lab, the testing, it's not like Europe. Which is literally like the Wild West. You have a game, launch it, gone. In the US, it's quite end-to-end testing with each operator. Just to get a game launched, it's 3 or 4 days with each operator. So it's a slightly different process, a bit more elongated. But once you get that knowledge and expertise, then I think the opportunity is obviously very, very large. I think the bigger issue is, do companies have the technology, the operational, the skill sets to necessarily want to go into the US? And I think over the next few years, you'll probably start to see, some, and this is my opinion, some really interesting aggregation opportunities for like a company like Bragg Oryx, because we have all of the infrastructure and the foundations in place in the US. We can go to a lot of, European-based content providers, and they can come and partner with us and get almost immediate access, know-how, knowledge, compliance expertise, and get access to the end customers. So I think, we're in a really unique position to be able to execute on that. And then Canada, I think, we'll probably get a similar opportunity. I mean, I think Canada's a little bit different, only because I think if you look around, most of the European content providers and B2C operators have businesses in Canada. So I'm not too sure how incremental that is for them. I think some of the local players there and some of the land-based players who will want to go online, I think there's a nice opportunity there. So I think that's why everybody's sort of looking at the US. Europe, as you know, is getting a bit tougher. There's a lot of regulatory changes. And I think the US has seen a sort of virgin territory and a lot of incremental opportunity. But you have to, I think, also recognize that it's quite a complex market to be able to operate in. So it's not such low-hanging fruit.
Yeah, I mean, on top of existing complexity enters Florida and the sort of conversations with Seminole in there, where there's a lot of sort of doubts still how this is all exactly going to work. But a lot of people talk about, all sports betting going through Seminole, through Hard Rock Gaming. So it's a really interesting how people look at the US and see it on state-by-state basis, not necessarily as one market, but some people just forego New Jersey completely because it's a bit late to gain market share and go straight for Massachusetts and so on. So
the only problem with that is you then, just from an integration perspective and a relevance perspective, I think a lot of the big operators want you supplying them in all their markets. They're not just going to take you just for one market. So, I mean, that's fine on a piece of paper, but in reality, I don't know necessarily if that works. But it makes sense to maybe, I can see strategically why people would say, look, New Jersey is very competitive. Michigan's a new market. Let's try and get into Michigan. But that theory only works on paper, because then you've got to get integrated with the operators. So how are you going to do that? The contracts, things like that. But yeah, it's going to be, I think, an interesting 12 to 18 months in terms of seeing how things evolve.
I meant obviously Michigan, not Massachusetts, but I just realized what they said it. So you talked about increasingly challenging situation in the European markets. We've got again European markets with their own intricacies and different regulations, Sweden, UK, and so on. But you're, as Oryx is a leading player in Germany, you're close to that market, and it's been a really hot subject, debated pretty much every week on our Clubhouse sessions. on the impact that the regulation is going to have on the industry. So I think where you said it would be really interesting to get sort of a summary of where we currently stand with this regulation as you understand it, and the impact you're seeing or you're foreseeing on the business.
Okay, well, I mean, I think this is a question for an entire podcast, although I'm not sure how many listeners you'd have by the end of it. But I'll give it a go. I mean, it's very complex what's going on in Germany. It's complex and it's not so complex. I mean, I think the reality of the situation is that you've got the new rules. We've implemented the new rules. I think if you look at what most of the quoted companies have said, I think Leo Vegas, you've had GVC, they've seen declines in their, if you take out table games and some of the other live, I think you're looking at probably 50% declines in their slots, which is sort of, what we were sort of thinking, 50 to 65% just based on running mathematical models. So that's what you've seen so far. Now, the only problem is that the market is currently, it's very difficult to diagnose what the real impact is, because you've still got a lot of operators operating, in the gray market. And so I think until we get to July, I think it's very difficult to really understand what's really going to happen in the German market. I think there are a couple of really important steps. I think number one, it's going to largely, in terms of the regulated market, the performance is largely going to be driven by channeling, and how successful the German regulator is in channeling the market onshore. And so the problem with the channeling area is going to be partly driven by court cases. And one of the challenges I think that's going to happen is that there's likely to be several court cases, partly around the differentials in tax rates between land-based casino slot machines and online, and the significant differentials and state aid arguments. So I think there is a chance whereby we could continue to get the typical German uncertainty for a period of time. That's a definite sort of, I'd give that probably at this moment in time, there's probably a 60 to 70% chance. So there's a high chance of actually a bit of status quo going on. So you're still going to get this market, which is the grey market, the sort of this regulated transition with operators, with the major tier one operators abiding by the rules, but obviously suffering because players can still play the games with the old rules. And while they're covered by, ongoing court cases, then we may still get this uncertainty for a period of time. And then, it's difficult to predict what the outcome of those court cases will be. I think there's every chance that the German courts just throw it out. And then maybe there'll be even, more legal challenges. So I think while that's going on, that may give a lot of EU-based operators, and it's important to stress EU-based operators, the ability to continue operating from Malta or wherever in Europe and targeting the German market. So which would then mean that you have this current sort of period of uncertainty for the licensed operators. So, I think it's difficult to call, to be honest with you. I think, if it was going to be a fully licensed and the German regulator was going to be really focused on onshore channeling, then I genuinely believe that within 18 to 24 months, you probably get about 3/4 of the market back, even based on the current 5-second €1 spins. And then my assumption would be that with effective lobbying, I think there is probably a good opportunity to get the 5% handle tax reversed to a more acceptable sort of gross profit tax.
I agree, and there's a lot of people that share the opinion that the market will eventually get back and grow. I mean, there's a lot of trust issues that are going to be now handled by the fact that it's now legal and legalized, and you'll be able to see advertising. But for me, the dangerous ground of this regulation is playing around with RTPs of the games, which sometimes feel like they are necessary to accommodate for this turnover tax, because the moment you start to lower and heighten the RTP as you wish, that's where you start losing players' trust, and that's the biggest danger for me.
That's true, but I think you've got to look at it in terms of you probably will get a group of players which probably will never come back. So therefore you do lose, let's say, whatever the percentage is, 30% of the market, 35%. But then you have the opportunity going forward that you're creating new players each year. So, thin layers of that 35% start to get replaced, and then people start to get used to the lower RTPs. If you look at American games and a lot of the American style games, the land-based games, there are much lower RTPs. So it's partly an educational thing. If you look at land-based, they're also a little bit different. So I think there's also a part educational process in this. But you're right that people that are used to playing the higher RTP games, will have a materially different experience, and therefore the likelihood is that given the way technology is today, they will look to seek out and play on websites that will probably continue to access the market, and that's the problem here. That's the inconsistencies of the regulator and what they're trying to do, because primarily the idea is to channel the business onshore so you can protect the players, obviously generate tax as well, but the key is obviously protecting players, and that's one of the major issues of just this regulatory regime that they've come up with. I think we could all live with what they have developed, but when you then suddenly I don't think there's anywhere in the world that has a revenue tax.
No.
So
well, there are land-based casinos, for example, in a couple of countries, but that's it.
But the difference is that online's it's a you can play anywhere in the world, so that's the big issue. So I think there's a good chance of probably a period of a bit more confusion, and then I think as we work through the court cases, I think hopefully, fingers crossed, I think by the end of the year we'll have a little bit more clarity on the current situation, and then hopefully the licensed operators will then hopefully have the opportunity that when they spend money on marketing and things like that, they can get a return on investment, and we can start to grow a material regulated German market.
So we talked about getting away from those regulated markets slightly and pursuing opportunities in high growth markets. What about Africa? I don't want to focus the whole podcast on markets, but I recall last year you said that Africa will be the next battleground for sportsbook operators. Do you stand by it, and do you still see it as this great opportunity? Because it doesn't seem to be as prominent, or at least as visibly in demand as the US.
Yeah, I think the US takes all of the headlines, but the market in Africa is far bigger. So, and I think as a continent, the demographics are far more encouraging. People are living longer, mobile penetration's increasing, the love of sports is incredible. Just the populations, in these countries are vast. So Kenya, $1 billion market. A lot of once you start adding these markets up, it starts to become very, very big numbers. You've obviously got some operational issues, currently, just because of the sort of telecoms issues with 3G and that type of stuff, and the phones. So the actual experience is not particularly rich at the moment, but it's improving. But yeah, I mean, I before I left SBTech, we did a sort of a huge analysis on Africa, looking at all the demographics, looking at the growth opportunities. And and a lot of these markets are bigger than a lot of European markets. So they're incredibly attractive. The propensity to gamble is high. The way people gamble there, if you're a sports betting supplier or operator, is phenomenal, because they're doing sort of accumulators of sort of anywhere from 8 to 15 teams. So they're betting let's say on average $1 to win thousands of dollars. So it's more like a sort of lottery style sort of betting product. Now in play is increasing as well as some of the operators roll out better quality technology. There's also a growing casino market in a lot of countries. Speaking to somebody yesterday, Ethiopia is also a very interesting market. I mean, you can go through. There's so many really interesting markets there. There are a lot of incumbents. A lot of the incumbents are not your traditional high-profile companies that you'll have heard of. So that's potentially why you don't see a lot of high-level coverage. But I'm pretty sure that over the next few years you're gonna read and hear a lot more about it. And I think it's increasingly going to be on more people's radars. But as I said, there are definitely some operational issues with Africa because of depending on which country it is, you tend to have an in-country partner.
Yeah.
So you have to sort of partner locally, so that adds a little bit more complications to the process. Some of the tax rates are quite aggressive, but you can handle that with the high margins. So I think trying to create a sort of global player. I think the likes of GVC and some of the big global guys with their own technology. I know they've been aggressively looking at Africa and looking to do things. So I think once you get one of the bigger companies establishing themselves and really investing there, then I think you'll start to hear a lot more about it. But it's definitely something that at Bragg Oryx, it's on our sort of strategic roadmap. I think there's a huge opportunity. It's probably not a 2021 story for us, but I think we'll definitely start laying some foundations in that marketplace over the next sort of 18 months. And as I said, in the last week I've spoken to I think 2 or 3 people who have all talked about looking to get licenses in different countries in Africa. So I'd say watch this space. There's definitely going to be a lot more interest in that marketplace.
I mean, I'm smiling because this podcast will be hugely popular considering the wealth of expertise you're just giving away in here. So thank you for that. I think many people will be grateful. Now, I'm not going to ask you too many questions around the subject, so I know it can be sensitive, but I can't ignore the fact that you were as SBTech CEO for 5 years, one of the key people in the massive deal, that saw the DraftKings and SBTech merge and go public with a 3.3 billion IPO, and it was one of the first deals where people started to talk about SPAC. For the benefit of some listeners, as we have listeners from different backgrounds, different seniority levels, can you explain what is a SPAC in a simple, approachable way?
Sure. Okay. So just for all of your listeners, so SPACs have been around for years. It's just that in this industry, it's just become quite high profile. So a SPAC is it's a special purpose acquisition company. That's what SPAC stands for. A SPAC has no commercial operation. So effectively, you create a name of a company like Diamond Eagle, and then you raise money. So you create an IPO. You tend to issue shares at, say, they seem to be $10. So you issue shares at $10. Which have warrants attached to them, which tend to be at sort of $11.50 or slightly higher. And a warrant's just a right to buy a share at a future price. And they're also known as blank check companies. So you'll hear them referred to as blank check companies. And effectively, what they try and do is they sit there, they raise traditionally from 200 to 500, 600 million dollars of cash. It sits on the balance sheet, and then they focus on a particular sector or industry, and they go and try and find a business that they think is interesting and has a lot of value, and they try and agree to buy that business and reverse it into the SPAC, and then the SPAC issues shares for the business they're acquiring, and then it normally takes to complete a deal as well, anywhere from 6 to 9 months, and effectively it creates a way of a private company sort of IPOing and raising capital on the US market. So they have been around for many, many years, but obviously over the last, it seems to me that when we did the SPAC with DraftKings and Diamond Eagle, it seemed to have created this chain reaction where now there's just so many SPACs happened over the last sort of 16 months that, if you turn on Bloomberg or CNBC, the financial news, that constantly now talking about SPACs, this, SPACs, that, there's a bubble in the SPAC market. This is getting crazy. There's these 100 SPACs. So I think SPACs have just, become incredibly popular over the last 12 months. I don't think, it just seemed to be the DraftKings SBTech SPAC seemed to just kick things off. But that's all it is. It's just a blank check company that, looks around to acquire a company, and then they reverse it in and then issue shares, and they retain a percentage of the company, and the company moves forward. Normally renames, and then you have a publicly listed company. And it sort of compares to a traditional IPO route would be the company would go through a slightly more elongated process. And the big argument that a lot of commentators are making now is that the due diligence and some of the corporate governance that would traditionally happen around a traditional NASDAQ, for example, IPO, is not necessarily happening with the SPACs. And that's the big sort of issue that people are talking about at the moment, is it's just around the due diligence process. But I think, like everything in life, if you stick with the high quality people involved in the SPAC who have a very good track record, then that tends to be, I think you can't really go wrong with that. But obviously in the last 12 months you've got a hell of a lot of people that have not really had anything to do with SPACs or anything that suddenly think they can make a quick turn, and I think that's where some of the recent negative commentary around SPACs is coming from. But I think overall it's a very clean and quick way for companies to access the public markets and raise capital.
So I didn't ask you this question just because you were involved in a SPAC type of transaction, but you also come from investment banking background, so you've got pretty wide expertise on these subjects. But this takes me to my next question. When we first met, it was probably around 5, maybe 6 years ago in Barcelona at an AGR event, and that was when you first joined SBTech. I think it was one of your first couple of months. So I wanted to know what interested you to join the industry. Why that company in particular? How did it start?
Okay, so I worked in. So I started my career in investment banking. Like literally first week, got given the industrial sector, which wasn't particularly exciting. So I was looking at companies in Hull that made belting for mining, for these big belts and all this type of stuff. But it was really interesting. So I did that, and then a couple of months later, there was these gaming companies like William Hill and Ladbrokes and Rank back then, and no one was really interested in doing them. They were very boring, so they gave me these companies. So I started to look at them, and then pretty quickly, in the UK, under the Labour government, the Budd report, and they were looking at all the deregulation and of gaming, and then suddenly online started to happen, and then within about a year, I was like the most important person in the bank, because suddenly there was all these sort of online gaming companies all over the world, and there were it was like the hot thing. And so overnight, I was like hot property, and I was just very lucky. And so right place, the right time. And then we focused on online gaming companies, where most of the banks, the bigger banks, didn't want anything to do with them because there was the grey markets. And so just naturally, we got involved, and so I got to meet all of the companies at the time, and then we did a lot of the IPO. So there was a company, you won't remember this company, I'm sure, but there was a company called Empire Online, which was basically a super affiliate to Party Gaming. So we did the Empire Online IPO, then Party Gaming IPO'd. Then there was, I think, Playtech, 32 Red. So we just ended up just doing all these IPOs and basically covering and researching all the companies. And doing quite a bit of M&A, and so got to know the industry really, really well. Spent a hell of a lot of time with a lot of the sort of founders of this industry, and then at Deutsche Bank, we were seen as probably the number one sort of rated M&A and research team. So we did all the major deals, and then sort of fast forward back in sort of 2015, we'd done with Kenny the GVC Bwin deal, and then got to know Kenny and those guys very well, and had dinner with Kenny and his chairman in Milos in New York, and and then just had a discussion, and they were like saying, well, why don't you come and work with us? And so thought about that, and then thought, yeah, that's a good idea. So resigned from Deutsche Bank, accepted a job with GVC, and then halfway through my gardening leave, John Anderson, who was the chairman of SBTech, who was the ex-CEO of 888, phoned me up and said, like, what are you doing? And I explained to him, like, I've left Deutsche Bank and I'm going here. And he was like, don't be mad. Don't go to GVC. You're not, you're not a CFO. You don't want to do all this investor stuff. I'm telling you, you're a CEO. You need to come and meet Shalom and the team. You'd be a perfect fit for these guys. So I sort of, I said, okay. And then Shalom called me, who's the major shareholder in SBTech, 10 minutes later, and basically wouldn't let me say no, and wouldn't let me, until I agreed to get on a flight to Bulgaria. He wouldn't let me go. So I agreed, went to Bulgaria, met the guys, and pretty quickly realized that, my God, this company's got incredible product. One of the best I've seen. I knew the sports betting industry, there was the sort of what was it called back then? Open Bet, was seen as a premier sort of supplier, but their business model wasn't the best. You had Kambi and a few others, and I just thought, wow, given the technology, given the platform, given their risk management capabilities, I just thought this was a great opportunity. So I met the team, met what Shalom had put together, came back, and then had to inform Kenny, which was horrible. So I told him, and then I guess the rest is history. So and I had a lot of 5 fantastic years with SBTech and the guys. And when we joined, it was a relatively small company with I don't know, 20 odd customers, and they were more like tier 3 customers. And at the end, we
all know the end.
The end. But we were winning companies like contracts like Oregon Lottery, Vikos. It just sort of that it was a phenomenal 5 years, and
owning
really
half of ice space.
It's
like always SBTech in the middle.
And just working with really great people, and I think at the end of the day, if you have a great product, really good technology, and very good people, and you have like a lot of energy and drive, then it's a
combination.
It's a very good combination, for success.
I'm going to ask a very last sort of business related question, but and you can say no if you don't want to answer, but I'm just interested, you talked about the dinners that happened, the flight you need to take, is there any particular event, phone call or dinner that you can mention when the talk between SBTech and DraftKings just kicked off for the first time?
I mean, there was so many. I mean, look, the process was quite elongated. So, you know, when you initially so one of the big things we did was we strategically, probably before anybody else, really focused on the US.
Mm-hmm.
So I remember having a conversation with Alan Lang, who was working with the AGA. And, you know, me and Alan had been speaking for quite a while about, you know, the opportunity in the US. And Alan was sort of at the coalface for party gaming. So I stayed in contact with him, and, you know, he helped SBTech quite a lot over the years. And then I remember having a meeting in Bulgaria with the guys, with the team, talking about the US. And I think everybody was a bit reluctant, but, you know, Shalom was brilliant, and, you know, spoke to him, and he said, look, you know, this is it, you know, we've got to go all in. So we made that sort of decision to go all in, and that obviously, you know, we required a lot of capital because we knew it was going to be, you know, a big project. So then we decided that we were going to look to raise some capital. So we went through the whole private equity and looking at, you know, different routes. And so that process was 9 months. And then we narrowed it down. And then effectively, I remember meeting Jason and in ICE, in G2E, in, I guess, when would it have been? 2018. So that was the sort of first meeting of sort of starting the process.
Okay, it's just an interesting fact of sort of how these things even come about, you know. Now, listen, wanted to ask you a little bit about non-business related things, because it's a running joke. I ask all the leaders that I bring to my podcast about their routines and celery juice and stuff like that. And it's funny because actually you and me do talk about celery juice in our private conversations. And, you know, I wanted to ask you, how do you sort of go around your work-life balance and health? Because you've had these high-flying, you know, high pressure, stressful jobs from the very beginning of your career with very little breaks in between. So is there any changes that you implemented post SBTech tenure after this intense 5 years, and you tried to keep it up now? And how do you go about it?
I slept a lot afterwards, but no, I think obviously it's very, very important to have a work-life balance, because if you don't, it starts to, I think, have just a negative impact on you and also on the relationships you have both at home and at work. So I think it's super important. You know, I was a bit of a workaholic, and, you know, I'm at the end, I was, you know, because we had the US business as well, it was quite a struggle, because, you know, be working during the day, and then, you know, we had a Las Vegas office, and, you know, so, you know, working till midnight, 1 o'clock in the morning is very difficult to unwind. So I wouldn't advise anyone to do that. But I mean, what I found is I now really prioritize my health. And so I invest a lot of, and it requires a lot of investment. And, you know, I've invested a lot of time, I've read a lot, and I think, you know, it's really important. So for me, I run quite a lot. So I'll run, let's say 5 to 7 kilometers. I try and do it every day. All the years I've been sat at a desk, I don't sit upright. So recently I've introduced myself to yoga, which is a real challenge for me. Like, I guess a lot of men, you know, in their 40s, I can't, you know, I couldn't touch my toes, and I had very, very limited mobility, and I just didn't want to end up, you know, not being able to, you know, bend over and stuff. And a lot of my friends have back problems. So I've really started to do yoga, and it's, you know, I used to laugh at yoga and just think, you know, who stretches? But actually, I've realized that, you know, stretching is probably more important than actually the actual physical exercise. And a lot of the people I've sort of, you know, engaged and followed and read, you know, they're spending a huge amount of time on the stretching side and the yoga side. So I think, for me, yoga is very important. I'm just at the beginning of that journey, but already getting quite obsessed with it and getting equally as frustrated. Don't seem to be making any incremental improvements. And then I think most people, underestimate the importance of what you eat.
Yeah.
So, and I really like food and cooking. So I've always, tried to have a pretty balanced diet and eat a lot. And I've really made a big effort to eat a lot more vegetables. But again, I think when you're working super long hours and highly stressed, it always seems to lead to wanting to not eat very healthy food.
Yeah.
So again, it's super important, and you get out of that routine. And we've talked a lot about the juicing and things, but I've just recently got into the celery juice, and it's
working, right?
It works, and it's the only problem is you become a bit, it becomes like sort of you've got to get celery juice.
I know. What if they don't have celery juice in Vegas?
I'm looking around Islington for celery juice. To buy celery. It's run out of Waitrose, so anyway.
Yeah.
But,
try to find celery juice during G2E in Vegas, or an oat cappuccino, or an actual healthy meal. That's when I go to conferences, it's so difficult because if you go to a fancy restaurant, you'll probably find some semi-healthy, but when you want to grab lunch on the go, it's so difficult at conferences. So
that should be your mission on the next G2E then, to find it.
Yeah, I think I'm going to complete my mission with my startup before I get into catering. But true. Yeah. Well, listen, Richard, we're coming close to the time. I think this was brilliant. Thank you very much for your time. Again, I think a lot of people will be super interested in your insights. I think your further journey is really interesting as well, because, you could have taken a longer break and give yourself some rest, but clearly there's something that really attracted you and gave you enough of a motivation to jump straight into another big thing. So Good luck with everything. We're going to be watching, and thanks again for being my guest today.
Thank you. It was lovely to spend time with you. So
thanks, Richard.
All right,
bye.
Take care. See you later.